Welcome to the Achievement Apex podcast, the podcast where I share my knowledge and experience on trading psychology, strategy, risk management, and everything else that you need to know to take your trading to the next level. I'm your host, Brendan Murphy, and without further ado, let's get ready to learn something new that you can use to improve your trading results. All right, the topic of today's podcast is everything to do with win rate. That is, how important is it? Because it's probably not as important as you think, as well as how does win rate affect our emotions when we're trading? Does increase in win rate affect our risk to reward ratio? And how do we avoid letting that happen? As well as maximizing win rate, maximizing profits, avoiding losers, and so on. But before we get into the topic of the podcast, as always, I like to do my weekly trade review to kick things off. So this week we had 4 trades in total and all 4 were winners. That gives us a win rate of 100%. And now it's a lot better than last week because as you remember, last week I was consistently getting in early, getting stopped out before the trade would have gone in my favor. So we made adjustments and this week it worked a lot better. 4 trades, 4 winners. The total profit that I made this week was approximately 1.9%, 1.8, 1.9. It's about that because I'm trading on 2 accounts now, so I'm just averaging the results. One account we had 2.16% profit, and on the other one we had 1.33. So off the top of my head, averages around 1.8, 1.9, something like that. And then our expectancy, which is the amount of money we can expect to make every trade, is around about 0.9% per trade. So on one account we had 0.67, the other one was 1.08. Push them together and you get the average of around about 0.9%. That was my trades, way better than last week. Very happy with that. We're going to continue on this approach and hopefully next week is just as good, if not better. So moving on to the topic of the podcast. The reason that I wanted to do this podcast on win rate is because this week I had 2, maybe even 3 conversations with people and they were harping on about how you have to get to 50% win rate. If you're a beginner trader, do everything you can to get to 50% win rate so that you can avoid losing money. And then I replied to them, I'm like, hey, win rate's not the only thing you need to think about. You can have a 50% win rate and lose money. You can have an 80% win rate and lose money. And then they're replying to me, they're like, oh, you obviously don't know what win rate is. And I'm like, I think the opposite's true. And I'm going to explain it in this video. So the idea that with a 50% win rate, you won't lose money. Well, win rate's only 1/3 of the equation. We need to incorporate our average win as well as our average loss. And when we do this, you'll be able to see that you can actually profit with a 20% win rate and you can lose money with an 80% win rate. So you can't just say that if your win rate's above 50, you're going to make money, because it's not the case. In fact, what a lot of traders do is they might have a win rate above 50 because our general wisdom says to close winners early, take the money, however, let losers run so you don't take a loss. And this will result in higher win rates. However, our risk to reward ratio is terrible with this approach. And that's why most people lose money. It's got almost nothing to do with win rate. So to really find out if you're profitable in the market, you have to include your average win and your average loss into the calculation. And this calculation gives us the expectancy. And you might have noticed in the start of the video when I did my trade recap, I mentioned my expectancy. And that's the amount of money you can expect to make every trade. And so to calculate that, you do your win rate times your average win, take away your loss rate times your average loss. And so if you have an average win of $50 and an average loss of $50 with a win rate of 50%, then you'll break even. If your average loss is bigger than your average win with a 50% win rate, you're going to be losing money then. So it's important to keep track of your average win and your average loss so that you know you have a positive expectancy and you will be making money in the market. So now we know that with a 20% win rate, given a good enough risk to reward ratio, you can be profitable. For example, you have a 20% win rate, your average winner is $100 and your average loser is $10. You put that into the formula, you do 0.2, 20% times 100, which is $20, take away 0.8 times $10, which is then $8. So then you do the $20 take away 8, which gives you an expectancy of $12 per trade. So that's an example of how you can be profitable with a 20% win rate. However, just because we can be profitable with a 20% win rate, does that mean we should? Because in my experience, having super low win rates doesn't feel good. It's bad for your emotions. It's bad for your trading psychology. What I've found in my experience, as well as with some of my clients, when you trade with such a low win rate, it negatively impacts you psychologically and you might start to trade with emotions. That could lead to over trading, it could lead to fear of missing out, it could lead to greed, it could lead to revenge trading, it can lead to a whole bunch of bad things. And I know that personally, I can't handle the 20% win rate. You might start with the 20% win rate. You might trade, you get the big winner, you get a loser, you get the big winner and you're profitable. But does losers start getting to you? Yeah, you have the big winner every now and then, but you're just getting smashed with loss after loss after loss after loss after loss. And it doesn't feel good. It feels way better to have a high win rate and getting win after win after win after win. Then you get a loss. Win after win after win. It feels way better. So if you can equate the expectancy of these two approaches, the 20% and the 80%, then I would prefer to take the 80% because you're going to be feeling a lot happier because you're winning more often. Even though the amount of money you're making is exactly the same, you'll feel better with an 80% win rate. Just because we can be profitable with a 20% win rate strategy doesn't mean we should. So the first thing we should be doing is always trying to improve. We should always be trying to improve our win rate. We should always be trying to improve our average win, and we should always be trying to improve our average loss so that our expectancy grows over time, we become more profitable, and our rate of growth is exponential. Let's talk about how to increase win rate. There are a few ways that you can increase your win rate. The first one is reducing your average win. Move your take profit closer to your entry. That's going to make you win more often. However, your average win is going to be lower. The other way to improve win rate, move your stop loss further away from your point of entry. And then your stop loss is going to be harder to hit, price is going to be able to go down lower before it turns around in your favor, and your win rate's going to go up. However, that makes your average loss worse. These two approaches to improving your win rate are generally not advised. They can sometimes be useful. However, you have to backtest every change you make when you're adjusting your take profit and stop loss, because the increase in win rate sometimes does not outweigh the decrease in the risk to reward ratio. So what I prefer to do when we're going to increase win rate is to increase it using other methods, such as using more indicators, tightening up your rules, taking less trades but only more certain trades. So an example of how you might do this would be putting a moving average on your chart as a qualifier. So when the moving average points up, you're only going to take long positions. That's going to cut out all those short positions you would have taken in the uptrend that are more likely to lose, and therefore you're going to be winning more often than you're losing. And then on the other side, when the moving average points down, you're only going to take short positions. It's going to cut out all the long positions that have less chance to win, and your win rate will improve. However, your take profit and your stop loss, they stay in the exact same places, so your risk to reward is the same, your win rate has improved. Another way might be to add an RSI to your strategy. Only take shorts if RSI is above 70. Only take longs if RSI is below 30. And just by doing that, you're going to cut out a lot of those bad trades that would have gone against you. And we can repeat this process for pretty much any indicator. You can add an indicator, figure out what the indicator says, when to buy, when to sell, and then use that as another rule for your entry. However, we can't just do this for a bunch of indicators and expect to then get a 100% win rate, because every time you add an indicator and tighten those rules for entry, you're going to be cutting out trades, and you're going to be cutting out some profitable trades when you do this. When you do this, yes, your average chance to win goes up. However, you are cutting out bad trades and good trades as well. And at some point, you're not making enough trades to be profitable, or at least not profitable enough. So for example, you're taking all of the trades. You're taking 50 trades per week. Your win rate is 40%. Okay, we implement some indicators, we tighten up the rules of entry. Now we're taking 10 trades per week. Our win rate is 65%. At this point, maybe you shouldn't add any more, because you're taking 10 trades per week. It's more than one a day. It's enough, right? Let's say you add 5 more indicators. Now you're taking 1 trade a week at most, and your win rate's like 75%. Yeah, you're winning an extra 10% of the time. You've just taken away 9 of your trades. And if you had a win rate of 65%, you've just taken away like 6 good trades. You got rid of 3 bad ones, but also took away 6 good ones. So is that really an improvement in your profit over the long term? You need to balance the indicators you're adding, tightening those rules of entry with the amount of trades you want to take. We obviously don't want to be taking 50 to 100 trades per week, because that's definitely over trading, and there's so many opportunities in there that you're taking that you shouldn't be taking. Because price goes against you, you get stopped out, or you go long and it just immediately goes short. Whatever it is, we do need to tighten the rules. We do need to increase the win rate and reduce the amount of trades. I generally try to aim for, at the very, 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 very least, 1 trade per week. At that point, like, are you even day trading? You come into your office and you look at the charts and you're like, let's look at this today, and there's nothing. Let's look at this chart today, nothing. Let's look at this chart today, nothing. Well, I got a trade. Oh, cool, I closed it. Yeah, I got a profit of $15. And you do that every week. Like, That's not enough. But on the flip side, I don't like to have a strategy that takes more than like 10 to 14 trades per week. 14 trades per week is probably the most. That's 2 per day. And at that point, I think you're taking too many opportunities and you are reducing your win rate unnecessarily. So I was kind of rambling a little bit there. So let's sum it up with some general rules. The first thing is when we're placing trades, we want to target a risk reward ratio of at least 1. That means for every dollar we risk, we want our take profit to be at least $1. So if you set a stop loss at $10, you want your take profit to also be at $10. And ideally, you want it to be even higher. Ideally, you want risk reward ratios of 2 or even 3 or even 4 in some cases. Now, as you increase your risk to reward, your win rate does go down. However, you want to find that balance between having a higher win rate and also having as high as possible win rate above 1. When your risk to reward ratio is dropping below 1, at that point, I think you're taking unnecessary risks. And if market conditions change, your win rate drops, then you're going to be losing a lot of money. Target a risk reward ratio of at least 1 and ideally 2 or 3. The next thing, and I kind of just said that, is we want to always increase our win rate as much as possible without ruining our risk to reward. So that means adding those indicators like we said, making more rules for entry that must be met so that we are getting rid of those bad trades, such as taking short positions in an uptrending market. And lastly, I say this all the time, you always want to back test your strategy. When you make these changes to your strategy, back test it so you know how many trades you're taking per week, so you know how that impacts your average win, so you know how that impacts your average loss, so you know if you are actually getting more winners than losers when you make the change. So you make the change, you back test it, the results are better. Then you find out what new condition makes bad trades. Then you try to find something so you can say, okay, this new indicator gets rid of these bad trades that I was having. Now let's back test it again. Awesome, even better results. Now you can put your strategy into trading with live real money because you've back tested it, you've adjusted it, and you know that it works because you have a positive expectancy. You have a win rate that you're comfortable with and you have a positive risk to reward ratio. And then once you're trading, you want to keep a journal of your trades. I have made a video on everything you should put in your trading journal, as well as how to improve your trading performance using your trading journal, collecting data from that and improving your trades. So please go and watch that video if you haven't, because it's very, very valuable, I think. So yes, backtest, trade, and keep a trade journal. I hope you found this lesson helpful. I hope you're able to implement some new strategies that you can use to improve your win rate. And I hope now that you're going to target risk reward ratios of at least 1 and hopefully 2 or even 3. If you found this video helpful and you have a friend that's into trading and you think that they might be able to benefit from it, please share it with them as well. And if you want me to make you a custom trading strategy specifically for your goals, that means if you want to trade Bitcoin, then I'll make you a strategy for Bitcoin. If you want to trade Forex, I'll make you a Forex strategy. It's specifically for you. Whatever risk level you're comfortable with, however often you want to trade, what time frame you want to trade on, your hours of the day. Like if you're away from 3 p.m. to 6 p.m., we'll code that in so it doesn't take trades from 3 p.m. to 6 p.m. Whatever your requirements are, I'll put it into the strategy. My job is taking your requirements and make it as profitable as possible to suit your goals. So with all that out of the way, thanks very much for watching, and I will see you again in the next episode. Bye-bye.